sole proprietorship form of business is the oldest and the simplest form of business. In this business, only one man invests capital, manages the business, and is responsible for the whole affairs of the business. This form of business has limited capital, skill, risk-taking capacity, and managerial ability. To resolve these limitations, two or more persons enter into an agreement to form a partnership so as to enhance capital, skill, risk-taking capacity, and managerial ability. We shall learn something over here about the fundamentals of partnership firm. In this video, I shall be discussing with you the basic meaning of partnership, its features, rights of the partners, duties of partners, something related to partnership deed, contents of partnership deed, and then very important, rules applicable in the absence of partnership deed. So all these things we are going to learn in this video, and the remaining points of the chapter we'll be discussing in the next video. Partnership is defined by Indian Partnership Act 1932, Section 4 as follows. Partnership is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. This is a definition given wherein, like you can see that the profits can be shared, right, of the business carried on by all or any of them acting for all. This is really very important point. We'll discuss in detail. The persons who have entered into a partnership with one another individually are called partners and collectively a firm. The name under which the business is carried is called firm name. So over here you have some important terms: partners, firm, and firm name. After going through the definition of partnership firm, let us go through the features, the characteristics of partnership. Number 1, two or more persons. There must be at least two persons to form a partnership, and all such persons must be competent to contract. Here we should know that which are the persons who are not competent to contract. According to Indian Contract Act 1872, every person except the following is competent to contract. Number 1, a minor. Minor is not competent to contract, and that's why in normal cases minor cannot be admitted as a partner. But yes, if all the partners agree, in that case minor can also join as a partner in a partnership firm. Second, persons of unsound mind, and third is persons disqualified by law. This can be one of the important question which can be there in the board exams also. Which are the persons not competent to contract? So you need to remember: number 1, minor; number 2, persons of unsound mind; and number 3, persons disqualified by law. Section 464 of the Companies Act 2013 empowers the central government to prescribe the maximum number of partners in a firm, but the number of partners so prescribed cannot be more than 100. This is also a very important question. How many maximum partners can be there in a partnership firm? So let us know something about that. The central government has prescribed the maximum number of partners in a firm to be 50, vide Rule number 10 of Companies Miscellaneous Rules 2014. And thus, in effect, a partnership firm can have more than 50 members. So don't confuse yourself. You just need to remember that 50 is the maximum number of partners a partnership firm can have. Number 2, agreement. Partnership comes into existence by an agreement, either written or oral. The agreement is the basis of their rights and duties. This relationship may exist for a particular venture, for a specific period, or at will. And the written agreement among the partners is known as partnership deed. Number 3, lawful business. The agreement among partners must be for carrying on some lawful business and to earn profit. You need to remember over here that mere joint ownership of some property is not a business. In that case, they are co-owners and not partners, as their motive is not to earn profit on recurring basis. So what are the businesses carried out by the partners? That has to be on recurring basis. Point number 4. Profit sharing. The agreement between the partners must be to share profits and losses of the business. It is not essential that all the partners must share the losses also. There may be a provision in the partnership deed that a particular partner or partners shall not bear the losses. And that is why in the definition you just find that the partnership is a relation between the persons who share the profits of the business. They don't mention the losses in the definition. This is one of the reason, because it may happen that one partner or more than one partner may not bear the losses. They are just the partners in profits only. Point number 5. Business can be carried on by all or any of them acting for all. This is also very important to understand. Business of the partnership can be carried on by all the partners or by any of them acting for all the partners. So over here, every partner play a dual role. In other words, partners are agents as well as the principals. As an agent, the partner represents the other partners and thereby binds the other partners through his acts. Whereas, as a principal, he is bound by the act of other partners. Now, let us go through some rights of the partners. Number 1. Right to participate in the management of the business. Yes, being an owner, the partner has a right to participate in the management of the business. Right to be consulted about the affairs of the business. Right to inspect the books of account and have a copy of it. Right to share profits or losses with others in the agreed ratio. Right to receive interest on loan if the partner has advanced it to the firm at an agreed rate of interest. In case the rate of interest is not agreed upon, interest is paid at the rate provided in the Partnership Act 1932, that is at the rate of 6% per annum. Generally, the rate of interest is pre-decided, but yes, you need to remember that if it is not agreed upon, then the partner has a right to receive interest at the rate of 6% per annum. Point number 6. Right not to allow the admission of a new partner. This is also a very important right of a partner. Without the consultation of the partner, no new partner can be admitted in the firm. 7th. Right to retire from the firm after giving proper notice. Yes, if a partner wants to retire, then he needs to give a proper notice to the other partners and then he can retire from the firm. Next, point number 8. Right to get reimbursement of the expenses paid on behalf of the firm. Suppose if any partner has paid expenses on behalf of the firm, like the firm was supposed to pay, but partner has paid it, then he has a right to get the reimbursement of the expenses. After going through the rights of a partner, now let us go through some duties of the partners. Number 1. Every partner should devote due time in the business. Second, every partner should carry on the business of the firm diligently. Third, no partner should engage himself in competitive business. Now need to understand something over here. If a partner engage himself in the competitive business, that means he carries out the same business as a partnership firm is carrying out. In that case, whatever the profit is earned by that particular partner, he has to share that profit with the other partners also. One has to take care that he should not engage himself in a competitive business. Every partner should act within the authority it is a duty of the partner to indemnify the firm for his willful negligence. Yes, if there is a loss taking place because of the willful negligence of the partner, in that case, he need to make good of those losses. It is a duty of each partner to use the property of the firm for the partnership firm only. Again, an important point. If the partner uses the property of the firm for his personal benefits, in that case, if he has earned some profit by using the property of the business, so again the same profits to be shared with other partners also. Next is partnership deed. We all know that partnership is based on agreement, and it is therefore necessary that terms and conditions of the partnership be agreed upon among all the partners. And these terms and conditions may be in the oral form or written form. Both are equally enforceable by law. However, the written agreements are always better to resolve the misunderstanding and dispute, if any, at a later date. Now, let us go through the contents of partnership deed. Number 1, name and address of the firm. Number 2, name and address of the partners. Number 3, nature of the business which the firm proposes to carry. Number 4, capital contribution. Over here, it is required to mention the amount of capital to be contributed by each partner. Number 5, interest on capital. Whether interest on capital be allowed or not. If yes, the rate of interest to be allowed, that needs to be mentioned. Point number 6, interest on drawings. Whether interest on drawings to be charged on partners' drawings or not. Again, if yes, the rate of interest to be charged. Point number 7, the profit sharing ratio. Ratio in which the profits or losses of the firm be shared by partners needs to be mentioned. Point number 8, interest on partners' loan. If a partner advances loan to the firm, the rate of interest to be given on loan also to be specified. Number 9, salary or commission. Whether any salary or commission be allowed to partners or not. If yes, then how much? That also needs to be mentioned. Point number 10, accounting period. The date on which the accounts shall be closed every year. We all know that now it is the financial year to be followed. The 31st March is the year ending for all the firms. Next, rights and duties of partners. This also needs to be specified very clearly. Next, auditing of accounts. Whether the accounts of the firm shall be subject to audit or not. If yes, then the mode of appointment. Next, operation of bank account. Whether bank account shall be operated by a single partner or jointly by the partners. Next, valuation of goodwill. Manner in which goodwill is valued in case of admission, retirement or death of partner needs to be mentioned. Next, valuation of assets. Method of valuation of assets in case of admission, retirement or death of partner also be decided. Next, duration of partnership. The period of partnership, if any. In case the partnership is at will, duration of notice required by the retiring partner. Next, the settlement of dispute. In case the dispute arises among the partners, how will it be solved? Next, settlement in case of dissolution of the firm. The manner in which the accounts will be settled in case of dissolution of firm. Next, settlement of accounts in case of retirement or death of a partner. We need to specify over here the manner in which the amount due on retirement or death of a partner will be computed and paid. Finally, the rules to be followed while admitting a partner. In case partnership deed does not exist, provisions of the Indian Partnership Act 1932 will be applied. Now let us know what are the provisions affecting the accounting treatment in the absence of partnership deed. We'll be going to the various matters, sharing of profits and losses. If partnership deed is not there, the profits or losses are to be shared equally by the partners. Point number 2, interest on capital. Interest on capital is not to be allowed to partners in the absence of partnership deed. Point number 3, interest on drawings. Interest on drawings is not charged from partners. 4, interest on partners loan. This is going to be very important. Even in the absence of partnership deed, interest on loan is paid at the rate of 6% per annum to the partner. This is just because the interest on loan of partner is a charge against profit. It means interest is payable even if there is a loss. Point number 5, remuneration to partners. Remuneration in the form of a salary or a commission is also not to be allowed to any partner in the absence of partnership deed. Point number 6, admission of a partner. No new partner can be admitted without the consent of all the existing partners. So all these 6 cases are really very important to be taken care of. Let us now go through some other provisions of Partnership Act 1932. Registration of firm. The registration of partnership firm is optional. It is not compulsory as per Partnership Act 1932. Minor as a partner. A minor can be admitted as a partner with the consent of all the existing partners. I have told you regarding this earlier also. In normal cases, minor cannot be admitted as a partner, but yes, if all the partners do give their consent, in that case, a minor can also be admitted as a partner. Point number 3, liability of partners. In case of partnership, the liability of each partner is unlimited. This is very much similar to the feature of a sole proprietorship. Unlimited liability simply means that a partner will have to dispose of all his personal assets, realize the money therefrom to clear the debts of the firm. It means that loss of partnership firm will be met first of all by the partners out of their capital and thereafter out of their personal property. Point number 4, sleeping partner. In a partnership firm, it is not necessary that all the partners remain active. One or more partners may be admitted as sleeping partners. They will contribute their capital for agreed share of profit. Interest on capital of partners. Interest on capital is paid to partners provided it is stated in the partnership deed and firm is earning profit. Both the points are really very important. First, it should be stated in the partnership deed, and second, the firm is earning profit. This clearly indicates that if there is no partnership deed, no interest on capital to be allowed. If there is no profit, no interest on capital will be allowed. Interest on capital is never paid if the firm is incurring losses, even though it is permissible in partnership deed. If the profit is inadequate to pay interest on capital, it will be paid to the extent of profit in the ratio of interest due to the partners. Following persons cannot be admitted as a partner. Number 1, persons of unsound mind. Second, insolvent persons. Number 3, any individual disqualified by law. And number 4, minor in normal course. Thank you so much. Please like, share, comment and subscribe my channel. God bless you all.